I'm Adam from MarketLife, and welcome to the free video for February 25th, 2020. So this video's got a little bit of a different format today. We had a big move in stocks. Basically the global stock market had a low-key crash in response to new concerns, new developments over the coronavirus. And what I'm sharing with you today is a snippet from our trade room this morning that we did for our MarketLife members. So it's about 5 minutes, but we're talking about how to deal with having positions on when you have a big move past your stop. So enjoy this video.
Two questions here in this chat this morning about what to do where opens gap below the stop. And that is, I guess what I'll tell you about that is it happens. Okay, so there's the first piece of wisdom I have. It happens, and it happened today on a lot of things. And the other thing that I will tell you is that you can't be making up what to do when it happens, because by definition, it's an emotional environment. It's probably an emotional event for you, but it's probably an emotional event for the broad market, but it's certainly an emotional event for you. And I've been slipped on stops 4+R. It does happen. One thing you can do is pull your stop in the first few minutes and see if you get some gift from the market like this. This is a gift. This is let's go down to 5 minutes. This is nothing but a brilliant, beautiful gift from the market. But because stocks mean revert, you get gifts like this with some degree of regularity. You'll see big overshoots on stops, and then you will see pretty sharp recoveries. The complication with pulling stops on the open is there absolutely is a chance that, let's look back here. Let's look at Activision. Look, we could have opened right here at, let's just call it 61, because who cares about pennies at this point, right? And the next tick could have been 60.5, and then we could have printed 59. Like, that is possible in the first 3 minutes of the day. And you can have a holy shit moment where your -2R loss all of a sudden turns to a -5R loss, and you just panic and freeze. And I've seen people in these extreme situations. I tell the story sometimes. I saw a trader one time who just could not push the button. Literally, physically could not move his finger, even though he wanted to get out of the trade. He was that paralyzed by shock. I think there's some really interesting psychology going on. So you have to realize there's a possibility of that gap against you, and you have to be prepared to just act on it. And by the way, if you do that, you're probably going to puke out at the low of the day. And that's one thing that makes people sit there and not get out the trade, because as soon as I push the button, it'll be the low of the day. Well, you don't actually know that, but just you have to be prepared for that. That if you look, let's go into alternate universe here, and let's say you had a big position in Activision, and it opened 61, printed down to 60, printed down to 59.5, and you're sitting there. You can't, and finally, out of disgust, it prints 58, and you get out of your position, and then it's going to bounce back up to 59, and you can't at that point throw yourself out of a window or punch a hole in a wall or smash a keyboard or do any of the infantile things that you're going to naturally want to do. You just have to know, look, that's what it's like to trade shit like this. Like, when the market moves like this, shit happens, and it happens to you a lot of times. So that's a possibility. But what you can do is put a stop just under, if the market holds together and continues to trade up, you can use some kind of trailing stop. And it could be, like one stupid simple idea that would work would be here to, it depends what you want to do. I wouldn't be too greedy. You're not trying to get back to the previous close. You're trying to repair the damage on a bad trade, and a trade that's gone bad. And so you walk a stop just up under the last 5-minute low, and that will get you out somewhere here. Now, I don't know, maybe it's 64 by the end of the day and we got out at a dumb place, but we can get out at 60, right? And I realize it wasn't quite down, but I'm speaking in round numbers. That's one way to do it. You pull your stop so it doesn't execute on the open. And then if it stabilizes on the open, you put a stop just under the low of the day, and then you trail the stop up as it moves in your favor. That's one way to do it, but you can't be figuring this out on a day like today. It has to be part of your trading plan. And, out of the 252-ish trading days in a year, this is probably going to be an issue on 10 of those days, maybe. So it's not something that happens enough that we get enough reps or enough cycles to really get good at this naturally. It's something you have to artificially push yourself to think about in trade management.
I hope that was helpful. I hope that was useful. I hope maybe it gets you thinking about things and how to focus on this important topic of position management. If this video has been useful, we'd appreciate a like on the video, subscribe to the channel, tell everybody you know, and hey, we'd love to see you at MarketLife. Go to marketlife.com and we'll see you in our trade room. Thank you very much.